Hey, no more waiting. I'm here right now. September 3rd, 2020, Thursday, one day closer to the weekend. How's everybody doing? Somebody still give me a knock here. A couple knocks. Make sure our sound is good today. We had sound problems with the night trader session at 11 like yesterday, but I'm assuming I've got that all knocked out today. There it is. Here we go, guys. So we'll let somebody tell everybody to refresh if they don't hear me. And then we'll get into the slides. Hope everybody had a great night last night. What a market yesterday. Closing out strong again. You know, the NASDAQ composite, everything starts to pull things up. Even when Tesla is kind of falling back, giving us an indication of what's going on here in the market today. Obviously, futures are trading down a little bit lower. We're seeing profit takers still kind of closing the books, if you will, on that August. That August was amazing in terms of returns. People also looking at September and that volatility that I keep harping about. It really is going to happen. It's not something that I think if I say it's going to happen enough. It's not a self-fulfilling volatility month. Good to see that we are loud and clear and you can see me as well. So let's take a look at the slides. I got to be honest with you. This morning I've been all over the place because I've been trying to figure out how I'm going to get this trading stuff set up for these 10 stocks. And all of a sudden the 10 stocks has grown to 11 because Cloudera and CrowdStrike and earnings, and I figure we might as well add those in and let you see what we can do with our entries and exits on those. But nonetheless, we're using the Thinkorswim trading or Thinkorswim platform. This is how it came down after all the work yesterday. We're using a Thinkorswim platform with a paper trading account that's got $200,000 in it. You know, because I've got $200,000 left. It would have been $2,000 if it had been me putting the money in there. Anyhow, we are going to, you know what, let's wait till we get into the definitions or the rules that we're going to use on trading our AE stocks for the next 20 days. But I think it's going to be a fun little project after I sat down and wrote some notes. And I've already got a few trades in there already. You're going to have to look at a different trade screen when we look at this because it will be in Thinkorswim. But I'm sure you guys, some of you at least, are familiar with that. So here we go. Let's take a look at some of the slides. Profit taken this morning. We're seeing the NASDAQ trade lower. You're seeing the S&P 5 trade about 15 points lower. Things came around the world a little slow as well. We've got a little bit of a drop in pens all over the place. What the heck? We've got a little bit of weakness that's trading over in Europe, but really the sign or the, forgive me as I pick up my second pen I've dropped off the floor. The thing I've been watching this morning is just the profit taking that's continuing to hit. You're seeing a lot of these high alpha stocks, the stocks that have been generating a lot of alpha through the month of August, get hit now. Tesla's down another 2% pre-market. You've got Apple that's been kind of trading around and bouncing, even though they got good news on products coming out. Bottom line is that I think there are a lot of people that really want to get some of that money off of the table as we head into September, which, as you and I have talked about ad nauseum, this is going to be one of those volatility months that we play out. It's going to be great for us night traders. Well, I'll show you the chart here in a second of the VIX, but get ready to get busy trading this afternoon, or actually a little later this morning, on some premiums on the volatility here. S&P 500 and the NASDAQ 100 stocks are actually seeing much more pressure than the industrials. There's a reason for that. The industrials are showing a little more strength right now. Retail earnings continue to provide a brighter view. And notice I just turn words into whatever I want to do, a brighter view of the discretionary spenders. So we are seeing a better view than what was expected. I mean, look at what happened with Macy's yesterday and the stock. They come out and they surprise with, hey, guess what? We made money and we're going to make more money. And the stock goes up and then comes right back down. It's almost like it's a Moderna situation, and they announced that they were getting closer to having some sort of coronavirus vaccine. The stock comes right down. This is the market telling you that all they think that they did was they went around and shuffled their inventory. Well, especially that line in their earnings announcement that said their inventory had been completely refreshed. Are you freaking kidding me? I was rolling my eyes on that one. So Macy's comes back down, and it's because a lot of investors looking at it from the perspective of what are they really going to do over the holiday shopping season. I'm putting together an article next week that's going to give you an inside trade on the retailers that you need to be buying as we head into the next nice seasonally strong period for retail stocks. That is the day after Labor Day until Black Friday, as I've mentioned before. But you're not going to be buying Macy's and JW, Nordstrom's, and all these companies. You are still going to be buying Best Buy. I'm going to basically give you a nice portfolio of stocks that you can buy and hold. Folks, this is how I earned my, this is how I earned my trading bonus at the end of the year. We all hear about Wall Street people walking into the Bull and Bear bar with six-figure checks in their pockets, a couple of days before the new year because they're happy they got their bonuses. Those bonuses were much larger than mine, but I would walk into the Leaping Lizard in Independence, Ohio with a bonus check and was pretty decent size, and it was because of the retail trade. The retail trade that I took advantage of every single year. It's going to be different this year. It's going to have a little bit of a derivative look to it, but we're going to trade it together. It'll be fun. And maybe we'll do something along the lines of what we're doing with the alternative energies. Let's get back to the slides because I'm going to get off key. And then all of a sudden, we run out of time. You guys don't want to listen anymore, et cetera, et cetera, et cetera. Here we go. Slides. So retail earnings continue to provide a brighter view of the discretionary spender. We're also going to get that jobs number tomorrow, which is going to be a key closer for the week. Right now, when we look at it, the market is expecting to see the number come in less than 1 million. We're going to pull down below 1 million in terms of the unemployment number, and the rate's going to come down as well. So really the question here is whether the ADP report was wrong yesterday, which it showed that we didn't create as many jobs as were thought. And that's where the battle's going to be fought out right now. Really, folks, I look at this from the perspective of it's been easy. The easy jobs have come over the last 3 months. The people that went back to work, that wanted to go back to work, are there. It's the next cutting in half of the jobless number that is going to be the hardest right now, and really trying to find those people that are going to find jobs, not just go back to the jobs that they had. Not sure what is already there, right? I'm guessing you're talking about the winking lizard. Yeah, out on what is it? Independence, right off of the exit there. Anyhow, the VIX continues its course, and that's putting us into action a little later today. Let's look at the charts. Are we really heading towards a 3,600 print on the S&P 500? I mean, I told you 3,500 plus 80, but now we got 3,600 almost plus 90, which is definitely going to be math that's going to be simple to do. That equals a lower S&P 500 at some point, way into overbought territory when you look at that short-term 14-day moving or RSI on this day yesterday, really pushes us up there. Not surprised to see some weakness in the market today as we start to see people really start to think about selling. Here's the QQQ. Notice the big dip in the QQQ. I'm showing the QQQ even though it says S&P 500. Huge dip in the Qs yesterday when we saw Tesla and Apple going down together. Tesla obviously yesterday would have bought some more shares of 100. What my system did for me automatically, ended up with them at 420 and the stock went up to 450. So you picked up an extra 7% even when the stock was down 5 or 6%. That's not a terrible day. But the cubes you can see follow course, dipping down, lowered almost to the 295 and then breaking back up over the 300 level. Watch that 300 level though. IWM I have to throw in there because it's still bouncing on that 20-day moving average, and it just looks like it's a trampoline at this point, folks. It's bounce, 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 bounce. Somebody bounced real high and shot it higher here. In this particular case, watch for this 1600 level, which is what that corresponds with on the actual Russell as we reach up to that, and a little bit of the potential for the double top. We're not overbought yet on the IWM, but at this point, I think that you have to worry about the IWM rolling over first. A little bit of risk on that's going to come off of the market. So getting to the CBOE volatility index, and third day above on a closing basis, the 50-day moving average. And as a bonus, we saw the 50-day give support to the VIX yesterday. This is telling us there's a call to action on the VIX. Volatility trade is back in play. The trend is going to start moving higher again. This is where you start to saddle up with a volatility hedge of some sort. You look at the VXX positions, you look at calls on the VIX. Calls on the VIX have been very popular with some of the institutional traders over the last couple of weeks, both in the October and the November series. The premiums have been going up considerably. They're doing two things here. They're trying to get themselves ready for a September volatility storm, and at the same time, they're trying to get ready for an election volatility storm. So the professional money managers are out there playing about 3 back months right now when you include September, October, and then November, looking to basically hedge themselves. Goldman Sachs had a great piece that was published yesterday on this that talks about how that's exactly what they're doing. They're positioning themselves for an election that is not going to be solved within weeks of the second Tuesday in November, but instead maybe months. And all kinds of things still being ballyhooed around by the media. You know, who's going to be in charge on January 20th? Nancy Pelosi can take over. And from my reading and what I read, and I'm not a constitutional attorney, so I'm not going to be able to give you that answer. But it seems like it was Steny Hoyer from what I'd read in terms of who would be in charge at that point. You guys can fight about that, though. Let's worry about trading. And you trade the VIX with either a call or you go in long on the VXX options and expect to see that VIX pop about 30 to 35%. 32.5 is where I've been looking for a target. Let's get back to the chart so you can see that. 32.5 would give you a move from right now. That 27.5 gives you about an 18% move in the underlying. Now, remember, in the VXX, you're not going to get that type of action because of slippage. So you're going to lose a little bit of that. Maybe you get 15%. In the VIX options, we could get the reverse of that if we get the premium right. And that's what I'll be looking at this morning, getting the strike and the expiration series rate, gets the premium rate. We don't worry about theta at that point. And then we get a little more convexity to the trade. So a 32.5 can result in a 50% return on the option, or you might just get 18% or so on the VXX. So it is time, folks, with those 3 closes above, and we're going to see obviously an open above the 50-day on the VIX today. Probably take out that 27.5 and the 200-day will fall pretty closely after that. That is going to be the indication that the 32.5, 35 is in play, and you should be getting ready to protect not only this, but remember your stop losses on any positions that are up in the 15 to 20% should have those trailing stops on them. Take a look at some earnings here that you can trade. Patterson Companies. Remember, man, I've been to the dentist twice in the last couple of weeks here. Patterson Companies beats by 9 cents. They nailed it last quarter as well. They're beating on revenues and they guided higher. So the stock trading at 29, we're going to see it trade a little bit higher through that 30 level. 30% of the stocks float is tied up in short interest. They've got a short interest ratio of about 5 right now. So a lot of people betting against this stock moving above that 30 level. I think you might get a little bit of a pullback to 28.50 or so here. You saw obviously yesterday the stock gapped above that 30 and came back down on heavy volume. That was before the earnings announcement. Earnings announcement comes out, maybe a little dip here, and then we shoot off to 30. I'm going to write this down because trying to keep track of all of these calls all of these forecasts that we're making. 30 and above on PDCO after a dip below 28 here. But Patterson is going to see that short covering really start to push the stock higher here. A great company that actually played out for us well in the night trader system. Another one that we traded in the night trader system to the bearish side and won twice last year. Michael Stores beats by 38 cents, beats on revenue. They also issued upside guidance. The stock went sideways for a few days ahead of the earnings announcement. Right now, the stock is trading a little higher in pre-market trading. I think we're still going to see it come back to the 1050 level as it's overextended itself. It's in overbought territory. Let it pull back a little bit. People were looking for this earnings because the stores did reopen. But the other side of this is you have to put this company into that same well or that same category as the companies that are going to do well through the rest of the shopping season, that Labor Day to Black Friday season, because people go out and make things at home now. Etsy, that's why Etsy's doing so well. Michael's is kind of a derivative of that trade. I like the stock to make it up to $14 or $15 before the end of the year based on that. Bullish on Michael's. Give it a little room to come down to you, but from there, I think it's up. Cloudera beats by 3 cents, beats on revs, beats, guides. Everything was good about Cloudera. So the stock, of course, is trading lower down to almost $12 right now. That is where I have a buy-in on these shares. CLDR is a ticker symbol that I've been watching, have a recommendation through the last roundtable that I did, $12. And this is where we'll give you the first look at the paper trading on the Thinkorswim. I actually do have a few orders in here that we could talk about when we get to the alternative energies. I could not help myself, though. I honestly couldn't help myself to go ahead and put in an order on that Cloudera to actually buy. In this case, it's $5,000 out of the $200,000 account at a $12 price. Right now, market's showing $12.97 at a $12 price, and it's down 7% in pre-market, which brings it pretty close here. So using the limit price, a good to cancel limit price of $12 to get into that stock. This stock has been one of the better in terms of the cloud performance and coming back, getting ready to break out from that high that they saw after their last earnings report. Expect to see a little bit of this type of activity, but the 20 and the 50-day crossing like this, if we didn't have the RSI that was overbought, this would be a strike point candidate right now, but it is not. Based on this technical trend alone, though, the bounce at $12 should give it a move much higher. Also, look at CrowdStrike. CrowdStrike beat by 4 cents, beats on revenue, guides higher on Q3, and their revs above guidance. Guides 2021 above consensus and revenues above consensus. Again, they did a great job, and the stock is selling off because we saw 3 days of buying the rumor, and the stock runs up to 150. 115 to 120 is where this stock starts to look attractive. If it gets down to 110, you're a fool if you're not purchasing at that point. But I hate to say that because a fool and his money can soon be parted, and I hate to be the one that would be getting that going for you, the instigator for you being parted with your money. So you wouldn't be a fool. I think the opportunity lies at 115, though, on the stock right now. You can see a top little bit of support here, comes back down. We're overbought. Get that out of the way. 115, you're into CrowdStrike, and you've got a target of 140 right away, and that's when the trailing stop goes in for the sawtooth rally strategy. Got to think of a better name for that, I think, at some point. The sawtooth rally strategy. Discuss amongst yourselves and we'll come up with something. Sportsman Warehouse is the last one that I want to cover, just simply because we have such a position in Dick's, and that is no longer in the night trader. We cashed out on that with some profits. Sportsman Warehouse is kind of that cousin of Dick's here. Beat by 47 cents, beat on revenues. Comps were up 61%. Dick's comps were up 150%, just to give you an idea. And they were up 300% on the online ordering. Dick's, I believe, was up 500. So you can see that this was just not the same, but good numbers as they are good numbers as Dick's had. Same type of pattern here. When we look at Dick's, let's go back to the chart of Dick's in the E-signal. Now I'm going to have to keep E-signal and the Thinkorswim separate here. But if we look at that chart with Dick's, it was kind of going sideways before it took off on that earnings spree. And we got this sideways activity with Sportsman's Warehouse as well. A little bit of a jump here. I think that the stock's going to do a little consolidation dance between $18 and $17 here. It is not overbought yet, so some room to move up towards 2021. I like this stock. This would be my second one to Dick's Sporting Goods that I would be holding in the area. And I would consider them one of those retailers that you have through the Black Friday rally. So with that said, our trading experiment with our 10 AE stocks, what are we doing today? And if those of you that weren't with us yesterday, these are the stocks we're going through: Genco, Plug, Fuel Cell, Blink, Neo, Tesla, Workhorse, Nikola, Enphase, First Solar. So when I look at these, I am looking at these stocks again as an opportunity for us to be purchasing them now. So in other words, we are trying to get into these positions as they are seeing weakness. And once again, of course, we've got each one of these stocks showing us a little bit of a weak hand as we get ready to start trading this morning. Let me get back down to the monitor that I have for it. I've already got some heavy volume trading on Tesla. Let me open up the spreadsheet that I have this in, and we might get a little bit better view. Actually, I'm not going to bother. I can look over here on this screen and actually give a little bit of a peek here. So you got Tesla at 447 right now, 412 actually, 412. So yesterday we talked about Tesla and 440 and 400. I think it's probably fair that, and I told you that, full disclosure, I was buying shares at 440 and then 400. So I ended up with an average cost of 420 yesterday. Did not do anything with this account, the TD Ameritrade account, because it wasn't set up. So what do you think? A 400 buy for $5,000 worth? It sounds pretty good, does it not? Or a buy for 5,000. And we're going to stick with 5,000. Here are the rules, if you will. We're going to break these down into $5,000 purchases. Every one of them individually, $5,000. We're not going to go, and that's going to be obviously, I'm doing this basically on a percentage, if you will, of the portfolio. So with a $200,000 portfolio, you really don't want to obviously put 10% into each one of these. You'll be putting $20,000 into each one. So I decided to kind of take that and put it in half and say, you know what, we could do either 10,000 or we could take it down to 5,000. $5,000 seems like something that at least most people can put their heads around and start to think about. Yeah, the 420 did get me laughing too, especially since, that was the price that Elon said that he was going to buy the stock at, or he was going to take it public. Genius. Anyhow, I've got, and you know what? I may have let's make sure that I did this correctly, because I was doing this a little bit early this morning. So we've got 400 at a $12. Yeah. So actually, I'm sorry. Yeah, we're at $5,000 on each position. So we're just going to stick with a $5,000 flat. We won't go. We'll figure out the shares based on that. That way, we're putting the same percentage, putting the same weighting. We're not saying that we're going to weight Tesla better than we're going to weight somebody else. We're going to buy fewer shares, obviously. But at this point, I think it's a fair assumption to say, sticking with the $5,000 limit. So I already have an order in here for $5,000 into fuel cell. And that price is at if you look over here, we've got your 240 limit. So let's take a look at the chart very quickly, just to get a little bit of fuel cell. We talked fuel cell yesterday. I brought up 240 as a point on fuel cell as well. Now, 240 is going to we're most likely to get executed. Let's make sure let's see where we are this morning on fuel cell. And after I go through a couple of these, we'll hit your questions. Fuel cell's trading 268 right now. I'd almost take 260, to be honest with you, on the fuel cell. I think 260, 240, I might be getting a little bit too greedy with. I like the 260 print here. I like the way that it bottomed there yesterday. I like the fact that you've got the 50-day just above that. 240 would take us well into it, not an oversold, but would take us quite a bit closer. I'm going to do this. I'm going to stick with my 260, and that may have been the number that I gave you yesterday. So I'm going to update that to a 260 before we get going here. 268 is what we're trading at right now. Zachary, I'm suggesting we go with the 260. And if I get 2 or 3 yeses, I'm just going to say that that's going to be a quorum. We're going to count that. I'll wait for a couple people to say yes or no. Because since we're doing this as a little bit of a project. Sonos, you stay. They actually just got a tariff. They just got an exclusion for tariffs again on their speakers. So Sonos is still a stay. I love it when I can answer a question, drink a little bit of coffee, and then hopefully get a confirmation on my 260. And I think I'm just going to say I'm in charge. So there we go. I'm going to change this to a 260 print. I'm going to leave the number of shares because it's going to be negligible in terms of the dollar amount that it's going to change it to. So we've got the 260 in on that. And we'll also, let's take a look very quickly. We've got on Plug Power, 800 shares to purchase at $12 with the stock at $12.95. So let's take a look at why I am looking at Plug Power. And this is the favorite, this is our prodigal son. This is the EA winner here. Breaking down below that 20-day, and that's what I was looking for yesterday. We got support at that yesterday. We're going to see at least one break of that 20-day with some more selling here on Plug Power. It's not going to take much, and once it does happen, it's going to be very quick and kind of vicious. The stock right now is trading $12.90. 12.90 ahead of the open. So it's down a little bit from yesterday's close above $13. I'm going to watch for today's volatility to take it 12 to 12. Hopefully we'll get filled at that. That gets us into two positions here within out of those 10. I think we take it, and I started looking. Let's look at the others real quickly, just to give you an idea of what I'm thinking. Tesla would be the other that I'd look at today with the 400 print in the possible cards, adding the Tesla to the portfolio, or the EA portfolio there at the $400 price. We're 17% below the actual price of Tesla when we look at where we are. That still, unfortunately, only buys us 12 shares, 12 and a half shares. We could round that up to 13. I'm not going to do partial shares on something like that. I think that's a go as well, guys. If you don't, I don't think it follows much further. You do have some institutions that are getting out of Tesla right now. And that's some of the pressure that was put on it yesterday. So in other words, people doing a little bit of window dressing as you're riding the hot hand all the way through August, and then you sell it because you think you're going to see a September that's volatile. I think if we break below 400, 360 starts to play as a pretty big, strong backer for it. At that point, you're down to the trader's trend line plus a little bit below, and the stock is well out of overbought territory. I think 360 is a place where it goes. 400 is, I think, where you put your initial buy-in at right now. It's at 447 at the close. And then you put in a second or a dollar cost average at 360. Let's look at a few of the others. Blink, which has been in a bit of a free fall here, closing at 729. Don't think it's time for this. $6 is the area where this starts to look good. Neo, similar type of chart here where the direction has just been all over the place. We've gone up, down, up. I think the buy on that is $16 on Neo, though. Workhorse, we know how well Workhorse has done. Night Traders closed out an 80% profit in it yesterday because it opened up at $21. It's coming back down again, though. $16 is the buy level on Workhorse. Blink, the purchase level on Blink right now, $6 is what I'd say, with it trying to still work out a bottom here. This is a lot of uncertainty with this technical and the 50-day moving average. I think $6 is where you buy, and I think it happens on a volatile day or two. 20 days coming down, which is not great. As soon as it gets around that 50-day, we might start to see a little bit of a trend reversal there, especially if we stay here. $6 is where I look at it on Blink, though. Nikola, I already mentioned. Enphase, let's take a look at Enphase. $77, and this is one of the higher, outside of obviously Tesla, higher priced stocks. This is one that I almost twisted around and said, you know what, we'll just get in at $70 because quite frankly, I'd like to be in this stock right now, or it might be the one that we just say 75 and hope that it gets executed at 75. I don't think that this is going to be a volatility move to the downside right now. It's not overbought. It's been consolidating across the top here. This could possibly be just a purchase at 75. Put a trailing stop on it of 5% because we are just going in with the purchase. And if it did start to break down 5%, it's going to run down to 65. That's going to give you, and this is, again, this is how the sausage gets made, folks. If you buy it now, you put in a 5% trailer and it makes the move down to, let's say, 65. You get out, you've still got 10% that you're going to be picking up in as it goes down another 15 or 10% to a 15% decline. And that's where you buy it at 65 and start to make that 5% up that you lost as it bounces off of that. I may go in with just a purchase at 75 on Enphase. And then First Solar. right around the same price, 77.45 on First Solar. $74, $75 is the price that I look at here at First Solar, just because it's doing a consolidation coming out of that overbought. I don't think First Solar is going to have much of a downward bias. You can see it is almost like Tesla. Boy, imagine that, given the relationship there. It goes sideways and then burst. It goes sideways and you got a little pullback here, but then it burst. Sideways, consolidation, burst. Sideways, consolidation, burst. So $75 is what I'm going to go in for, maybe even the 7487. And I'll put the rest of those into the system this morning so that they can get executed. Nikola, when I was looking at Nikola, 39.42 right now. This right now is still in a rollover phase. $35 is the price on Nikola that I start to look at this and get interested in it. That is not the ultimate. I'd love to buy it at 30. I'm not sure whether it gets there or not. Nikola is right now kind of trending into this consolidation. Look at, they're still overbought though. $30 would be the bottom line where I'd buy it actually though. Let's just call it 30 because we don't need to be, I can be picky on some of these because we don't have to have all of these positions in the quote unquote portfolio. So Nikola, we go with a 30. Nikola, we go with a 30. Let's get into, we've got about 11 minutes or so. That really covers what I wanted to cover with the EA portfolio. I hope that gives you guys a little bit of an idea. I hope you're going to be happy with what we're doing. It's going to be fun to watch this grow or maybe not grow, and we learn from some trading mistakes. This is the page you'll be looking at as we start to, and I'll get the chart down here so we can have that instead of all this blank area. But this is what we'll be looking at every day, is a kind of an indication of what we're doing with the portfolio, how it's paying off for us. We will use the sawtooth method when we get up more than 10-15% on a position. I'm going to put a 5% trailing stop. When we get over 20%, 25%, I'm going to go ahead and put in a 3%, or I'll ratchet that higher to a 3%. So we'll use that exact strategy when we're trading these. One other stock I wanted to add to the mix here, Albemarle. Albemarle, and this is one that I know DR has been all over. ALB is a ticker symbol. This is a materials company. It's in the XLB. They've been selected by the Department of Energy as a partner for the lithium research project they're doing on batteries for the DOE. I think this is an interesting move because a lot of people don't talk about the work behind the batteries. We talk about Battery Day, we talk about Tesla, we talk about, you know, all of this stuff, but this is getting into the materials that are going into those batteries, and Albemarle is kind of stepping up and becoming more of a key part of that process here. Albemarle stock, you'll see here in the next page, has been doing well. It's been outpacing the rest of the materials. Normally, I don't look at materials when there is a situation with the economy where you really don't know any kind of certainty. But in this case, there's something that is going on outside of the, you know, what they're delivering to just the normal institution area or institutional industrial area. And now they're getting out and branching and getting a little specialized. I like Albemarle and I like this move. It's been a stock that I've been bullish on before. I have not picked it up since May, have been looking at it along with all the other materials, saying I don't want to go into the materials right now until I start to see global demand really start to shift up. But I think you need to take a look at Albemarle as a breakout because they're now branching out into other areas of the market that are going to give them a little more excitement, let's say. With that sign, you know that we get to go look at your charts here. So I will do exactly that. Let me hit the questions real quickly here and see if we've got any. Yep. Can Snap make new highs? Absolutely, they can. Are they going to make new highs? Probably. They're breaking above the 50-day moving average. This would be very close to a strike point if it weren't for the fact that the RSI is going to get overbought very quickly here. You're going to move up to about 25, and then it's going to run into some resistance. That's where you see whether it's going to actually start rolling over or not, because that 50-day is leveled off. It's going to give you a little bit of a bump, but you've got 25 being some resistance here. 27 obviously here as well. I think Snapchat, as we head into the last part of the year here, starts to do exactly what they did here. They're not Facebook. They are not Facebook. Facebook actually last night announcing that they're going to not allow any more new ads coming onto the platform between now and the election. So they're trying to control themselves a little bit. But you see what was happening with Facebook when we had all kinds of problem with what kind of content was going up on Facebook. And the other one would be Twitter, obviously, if you look into this area. Twitter also in the same kind of spot with a little more uncertainty. I think out of the three, you look at Snapchat because it's a little more quote unquote independent, if you will. And then you always look at Pinterest. Pinterest is just over there doing their own thing. I like Pinterest out of all four of them. I like Pinterest the most. I think that they are the most benign when it comes to the political side. And I think it's the one that people have the most fun on. I don't use it myself. That's not completely true. I have found myself on Pinterest when looking at stuff for the camper, little, modifications to the camper. But I think Pinterest is somewhat benign when it comes to the political arena and that environment. And that's why you see Pinterest continue to lead higher. Snap's not a terrible one, though. ETF that tracks the AE stocks. The ICLN that I talked about on Monday is one that captures a number of those. Not that attracts all of those as we have in our list, but the ICLN would be one. There are a few others that are out there. If you a really great tool is the etfdb.com site. You can go there. I believe they have a tool where you can, and I've got one here on my database where you can put in a list of ticker symbols and it'll give you the ETF that fits best for those. So example, if I drop my 10 in, I can give you an answer tomorrow, which ETFs have all 10. Excuse me, guys. Which ETFs have all 10 or have the most of those? And I'll pull that for you before tomorrow. Docu today before and after earnings. You know what? I mean, company's going to knock it out of the park here, I think, still. Look at it, though. It has been played. This is one where I always when I see a stock that's done this, I always kind of let it cool off. I put it into its own cooling off period. DocuSign is doing a great job, obviously, earnings showing that. I think that you need to let this one kind of level off a little bit. Volume like this is going to continue for a day or two as you've got people coming in. It's a revolving door volume situation. People going in and out of this one so fast, it's not funny. Not that you're going to lose a finger trying to catch this one on the way down, but I think that this is going to be a stock that needs to kind of level itself off. Fuel Cell and Ballard Power, yeah, absolutely. Solid stocks for gains. These are still investor stocks. Fuel Cell is more of a trader stock, as you can see by my charting here. I've been trading this thing all over the place. You get 60 to 90% upside on these pull-ups, and you get 40% downside on the dips. So that is a trader's dream to have this. Ballard Power is a little more even. BLDP, the ticker symbol on that. We've talked about that quite often. I love calling it Plug Power's attractive cousin. They are developing hydrogen. They're not buying hydrogen the way Plug Power does. That's why Plug Power has been developing a little bit faster. 20-day captures it here. A cross back up above puts us into a strike point, and it would target a move to $20, maybe $19 at that point. I like Ballard Power, and I like it not only as a trade, but I like it as a long-term investment. Show the chart for support on Google in September. Can you please show the chart for what is the support for Google in September volatility? That would be a hard one to drive. You know what the best one? I wanted to give you one number that would be support. And obviously I could point to the 1500 level, right around 1500. You get the 50-day. And this is if we were to pull back that far, you're pulling back from 1717. Always look at the monthly charts when you're looking for true support. If we really run into a lot of volatility and you've got it, 1300's a number there, but 1500 stands out here because we've got a bottom that built there. We've got a top that built there. 1500's a number for Google as I look at it for support. And I don't own Google. I don't own shares of Google. So were I a buyer, I'd be buying at the 1500 or I'd be selling before. Occidental, OXY. Let's look at this. Is this still a bull? When can this become a bull trade and what's the support and resistance sell at this moment? You know what? I am not sure this becomes a bull trade. Let's just put it that way. Oil right now, and especially our oil companies, are in a spot where oil is in a sweet spot for other countries to develop and not for the United States to develop. Occidental kind of stuck in the middle right now, $12.40. It's not going to go completely zero volatility on you, but it's going to be low volatility. If you look at the monthly chart, it's just as bad on Occidental. I mean, that's just miserable. People will start talking about dividend, but they've only got a 32 basis point dividend. So it's not even a fact. They've dropped their dividend, I think, twice in the last year. I don't know that this turns into a bullish trade. Maybe it does when somebody else buys them. I'm not sure, but that's what I would be. I would not be buying Occidental myself for my portfolio or my mother's. Disney remains bullish. I like what they're doing across everything here. Actually, I don't particularly like the park activity. I think the park activity is going to lose them money. But there's also obviously a theme that they have, which is we're open. We need to be open. We need to do whatever we can to be open, be safe. That's going to come at a cost. Disney's going to continue to move higher because they've got their media moving and shaking right now. I think that's where you find the money to be made right now on Disney. It's not going to be on the parks for another year or so. And obviously, I always point out to the fact that you got to get the airlines going before you can get Disney going on an amusement park level. And the airlines they're getting ready to make some big cutbacks here in terms of where they're going and how often they're going to go and how many people are going to be flying them. So you got to think, is everybody going to drive to Disneyland? No, hell no. So Disneyland continues to go higher, but it's only on their media business. How do I wait for the target? How long do I wait for a target to get filled on these trades that we're looking at with our alternative energy? I'll wait a day or two or three unless the trend reverses and starts heading the other direction. If it does head the other direction, I can always and will always go ahead and adapt and say, okay, here's what makes sense. ZB, in order to people to follow along with the EA portfolio, each stock has an entry price we just went through. Each stock has the same amount, 5,000. Yep. That is correct. Absolutely. And we may buy back in. I will let you know if we want to buy back in with a second round. So in other words, if we have a situation with Tesla where it dips below 400, which it's going to do in just a moment here. It's 409, 408. I haven't seen a 407 yet. But let's say it hits 400, and then I look at it and say 360 is our buying. We can dollar cost average, and that's why I'm going to $5,000 because that's only 2.5% of the portfolio. You can go up and double that and go into a 5% position, and you haven't overweighted, in my opinion, for this type of project. There you go, guys. I'm going to let you go do your trading. Let's make a little money. 11 o'clock, I'll be here with my night trader people. We're going to talk a little bit about the portfolio, taking some more profits from some of those positions and getting a little defensive is what we're looking at doing right now. So make sure you tune in with me then. We're going to be looking at VIX options. We're going to be looking at a couple of shorts as well on indices. So starting to gear up for what August or September rather usually brings us. See, happened again. I brought up August. So I will see you guys in about an hour and a half. I'll see everybody else tomorrow for the last one of the week. And I hope you have a great day. Wish you the best trading success. Thanks again, folks.